Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Jagran Prakashan, what is wrong with the company and what you need to do with it. So let's get started. First of all, a disclaimer that this is not a stock recommendation and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Jagran Prakashan, his small request that kindly support me on Patreon. Once you do that, it will help me grow the channel, help you also ask me questions in detail. Once you get the $10 membership, you will have access to my portfolio, my watch list, and a number of podcasts that I put up on Patreon. For detailed market or you have a number of companies with you, you can directly email me and we can work things out. Now about Jagran Prakashan, established in 1942, it is an Indian newspaper and magazine printing firm. Dainik Jagran is a brand of Jagran Prakashan, and we already know about it in detail as one of the biggest Hindi brand of newspapers that run, one of the largest printing firm. Other products are Midday, City Plus, and iNext. Market cap of the company is around 1200 crores and have ventured into the online space as well. So they provide these facilities of reading these magazines and newspapers online as well. If you look at the financials of the company, then the sales had dropped by around 67% for this Q1. Profit dropped sharply, and so a profit of 65 crores have become a loss of 44 crores. High promoter and institution holding, and there's only 10% free float, which is a huge positive for the company. Company is low debt, a very good return on equity and operating profit margins at the moment, and that's why I picked the stock. If you look at the stock performance, stock has underperformed appreciably. So it had fallen 50% in the March fall. It went up and it was doing reasonably okay up till February, March of this year, but then fell sharply 50%. From 2016 till 2019 odd, it was a complete underperformer, and remember that the business is lacking, so those return ratios are probably an average of what has taken place over the years, but the business has been slacking with low demand at the moment, has not recovered much from those lows of March and has not moved up sharply. Currently trading at around 6 times earnings, which looks extremely attractive, but then you need to understand whether numbers would come in or not. If the numbers doesn't come in, I don't see a re-rating on the basis of PE for the stock. If you look at the technicals of the company, stock has remained weak even in surging market. So you look at that the mid and small cap market has done reasonably well after the fall in February and March, but after that we have what we have witnessed is that some of the sectors and stocks have really run up and gone to all-time highs even in the large caps and some in the small caps, but some of the stocks have really struggled. So Jagran is on that struggling path and has not recovered that much. The 200 DMA is around 49. Currently it is at a strong short-term support, and maybe it would not fall much, but if somebody is having the stock, then he can have a, you can say, a last, you can say, stop loss of 31-30 rupees or so. That is a long term support there. I think below 52 it is weak, above 52-54 we could see 60 and then even 75 levels on Jagran Prakashan. But one thing you need to understand that it may continue to underperform because of the kind of business that it is into, and maybe that sort of a business might not do that well going forward because of lower demand. With better online facilities of news and magazines, etc., people are staying away from using such stuff. With access to internet quite easily, people are watching more news rather than reading. So things have changed drastically with the kind of business that the company does. So what needs to be done, in my opinion? Avoid for the time being. Can only be looked at if there is a complete change of the business. So one thing that the company can do, and probably over the time it would happen, that they would come out with only you can say on online platform, and do really well there, have their own channel probably, and they have some Hindi channel as well, but have a greater bandwidth through online presence, and then sell products through there, rather than providing newspapers and magazines at home for people to read. Of course, it will continue to have some sort of a business, but that is not a growing business, and so people or large investors would not like to get into it. So absolutely and avoid online media, as I said, much stronger at the moment. And look at online space and companies that deal in online, and look at the valuations at the current levels, and people are running to buy even more of such products. So what you need to do is better to buy consumption companies, pure consumption plays, like the FMCG products, like other consumer durables, white goods, even some auto companies, pure auto companies, they are all, or electronic companies, electronic manufacturers. There are many companies that you can look at apart from this sector, in which you can make a good amount of money if you have it from a very long time, or if you are holding it. Have a stop loss at 30, don't let it go below 30, and exit even in losses. For you to make money, you need to at least survive. So keep that money aside and invest into good quality consumption companies. Have only 5% of the holding in such companies. So this was my video on Jagran Prakashan. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.